Ladies and gentlemen, archivist here, I want you to do something for me right now. Turn off the TV. Turn off CNN. Turn off Fox. Turn off the Bloomberg terminal. They are lying to you about what happened in Venezuela this morning. They are telling you that the January 3rd raid was about restoring democracy. They are showing you the photos of the Marines in Caracas. They are showing you the mission accomplished banners. They are telling you that the region is stabilized, that the tyrant is gone, and that the markets love it. They point to the price of WTI crude oil sitting calmly at $57 a barrel. And they say, see, no panic. The world is awash in oil. The United States is energy independent. Everything is fine. But I'm here to tell you that the number on your screen is a mirage. It is a ghost price for a commodity that doesn't actually matter. While the algorithms are trading light sweet oil, the real crisis, the one that will send your grocery bill up 40%, bankrupt the independent trucking industry, and force rationing at the pump by February, is happening in the dark, murky, unglamorous world of heavy, sour crude. We are exactly 30 days away from an event I'm calling the Orinoco blockade. It isn't a blockade by ships. It isn't a blockade by sanctions. It is a blockade by chemistry. The raid on January 3rd didn't liberate the oil. It froze it. And without the thick, toxic, sulfur-rich sludge that comes specifically from the Orinoco Belt, the Gulf Coast refining system, the most complex machine in the history of industrial civilization, is about to suffer a catastrophic heart attack. Today, we are going to look past the headlines. We are going to open the technical manuals of the Valero, Marathon, and Exxon refineries. We are going to do the chemistry math that the White House prays you don't understand. And I am going to explain why $200 oil isn't a fear-mongering prediction. It is the price you pay when you build a $20 billion machine that runs on Venezuelan blood, and then you cut the artery. To understand why we are doomed, you have to first unlearn the biggest lie of the last 15 years, the myth of energy independence. Since the fracking revolution began in 2010, you have been bombarded with propaganda. The U.S. is the world's largest oil producer. We pump 13 million barrels a day. We don't need the Middle East. We don't need Venezuela. Technically, on a spreadsheet, that is true. We pump more liquid out of the ground than anyone else. But here's the forensic detail that the energy lobbyists leave out. Not all oil is created equal. Oil is not a fungible commodity like gold or copper. It comes in a spectrum. On one side, you have the oil that comes out of the fracking wells in Texas and North Dakota. This is light sweet crude, LTO. It has an API gravity of 40 to 50. Think of this like champagne or Diet Coke. It is thin. It is volatile. And it has very little sulfur. It is great for making gasoline, but it is chemically thin. On the other side, you have the oil that comes from the Orinoco Belt in Venezuela or the oil sands in Canada. This is heavy sour crude. It has an API gravity of 10 to 20. Think of this like molasses or liquid asphalt. It is thick, heavy, and full of sulfur and heavy metals. Now, common sense would tell you, well, champagne is better than molasses, right? We should be happy we have the light stuff. And in a vacuum, you would be right. But we don't live in a vacuum. We live in a world built by engineers in the 1990s. This brings us to the refinery mismatch. In the 1990s and early 2000s, the major U.S. oil companies made a massive strategic bet. They looked at the world and said, light oil is running out, but there's an ocean of cheap, dirty, heavy oil in Venezuela and Canada, so they spent billions of dollars upgrading the refineries in the Gulf Coast, PADD 3. They built massive coking units and hydrocrackers. These are essentially giant pressure cookers designed to take the cheap Venezuelan sludge, break its molecular chains, and turn it into premium diesel and jet fuel. They built a machine that eats garbage and poops out gold. But here's the catch. Think of a refinery like a human stomach. These heavy oil refineries were evolved to digest steak, heavy oil. If you suddenly feed them nothing but sugar, light fracking oil, they get sick. You physically cannot run a heavy oil refinery on 100% light oil. It destroys the equipment. The light ends boil off too fast. The pressure columns become unstable. The coking units, which need the heavy carbon residue to function, starve and overheat. To keep the system from exploding, the refiners found a solution: the blend. They take the abundant light oil from Texas and they mix it with the heavy oil from Venezuela to create a medium sour blend that the machines can handle. It is a precise chemical recipe, and the most important ingredient in that recipe is a specific grade of oil called Mary 16. Mary 16 is the Goldilocks crude. It comes almost exclusively from the Orinoco Belt in Venezuela. It is the perfect heavy counterweight to the super-light oil coming out of the Permian Basin. For decades, the U.S. refining system has been addicted to Murray 16. It is the chemical glue that holds the U.S. energy grid together. When the sanctions hit Venezuela in 2019, the refineries suffered, but they managed to survive by draining the Strategic Petroleum Reserve, SPR, which held heavy oil, and buying more from Mexico. But today in 2026, those lifeboats are gone. 1. The SPR is empty. We sold the heavy oil reserves in 2024 to buy votes with cheap gas. 2. Mexico is gone. The new Mexican government has cut exports to refine their own oil domestically. 3. Canada is maxed. The pipelines from Alberta are running at 100% capacity. There is no more room. That left Venezuela as the only source of heavy crude available to save the Gulf Coast. And that is why the U.S. military raided Caracas this morning. They didn't go there for democracy. They went there because Chevron and Valero told the White House, if we don't get the Murray 16 flowing by February, the U.S. diesel supply goes to zero. But here's the tragedy of the raid. War is messy. The generals thought they could decapitate the government and turn the oil taps back on, but the reports I am seeing from the ground describe total chaos in the Orinoco belt. The pipelines have been sabotaged by loyalist militias. The power grid that runs the heavy upgraders has been cut. The port workers in Puerto Jose have fled the shelling. The flow of oil didn't increase. It stopped. We are now in a force majeure scenario. The tankers that were scheduled to load Murray 16 this week are sitting empty in the Caribbean. The tankers that are currently at sea carrying the last remaining supply will arrive in Houston in about 14 to 20 days. After that, the cliff. We are staring at a supply void. For at least 60 to 90 days, there will be zero Venezuelan oil hitting U.S. shores. And remember, the refineries cannot wait. They run on a just-in-time schedule. When the heavy oil tank hits empty, they cannot just switch to light oil. They have to shut down. This is where the price prediction comes from. Economics 101 says price is determined by supply and demand. But in the refining world, price is determined by the crack spread and the cost of failure. Imagine you are the manager of the Motiva refinery in Port Arthur, the largest in North America. You process 630,000 barrels a day. If you have to shut down because you lack heavy crude, you lose $50 million a day in revenue. Plus, shutting down a refinery isn't like turning off a light switch. It takes weeks to cool down and weeks to restart. A shutdown is a catastrophic financial event. So if you are that manager and you see the last tanker of heavy crude on the market, what will you pay for it? Will you pay the spot price of $60? No, you will pay $80. You will pay $100. You will pay $200. You will pay anything to keep the fires burning because the cost of the oil is irrelevant compared to the cost of the shutdown. We are about to see a bidding war for sour crude that will decouple completely from the WTI benchmark. WTI might stay at $60 because the market is flooded with light oil nobody wants. But the real oil, the oil that makes the economy run, is going to the moon. The algorithms haven't figured this out yet. They see U.S. production high and they sell oil. They are trading the volume, not the grade. They're like a man dying of thirst in the ocean. There is water everywhere, but not a drop to drink. The U.S. is drowning in light oil, but it is about to die of thirst for heavy oil. Now you might be sitting there thinking, okay, archivist, so Valero loses some money. So gas goes up to $4.50. I can handle that. I drive a hybrid. I work from home. Stop being naive. This isn't about your commute. The refinery mismatch doesn't just affect the price of gasoline. Remember what I told you the heavy refineries produce? They produce distillates. They produce diesel. Light fracking oil is terrible at making diesel. It's too light. Heavy Venezuelan oil is the primary feedstock for the diesel that powers every semi-truck, every freight train, every tractor, and every container ship in America. By cutting the artery to the Orinoco, we haven't just squeezed the oil companies. We have severed the fuel line of the global supply chain. In the next section, I'm going to walk you through the diesel death spiral. I'm going to show you why a shortage of Murray 16 leads directly to a shortage of food on the shelves by February 15th. And I'm going to explain why the most valuable commodity in the world next month won't be gold and it won't be Bitcoin. It will be a 50-gallon drum of red dye diesel. We established the trap. The Gulf Coast refineries are addicted to Venezuelan heavy sour crude, Murray 16. We established that this oil has stopped flowing as of January 3rd due to the military raid in Caracas. But you probably don't buy heavy crude. You don't own a refinery. So how does this destroy your life? The answer is diesel. Specifically, the gap between supply and delivery. Most Americans don't realize that the economy does not run on dollars. It runs on diesel. Everything you eat, wear, or touch was moved on a truck, and that truck runs on ultra-low sulfur diesel, ULSD. Here is the nightmare scenario that the freight brokers in Chicago are whispering about right now. It is called the yield collapse. Remember the light fracking oil from Texas? When you refine a barrel of light oil, you get about 45% gasoline and only 20% diesel. When you refine a barrel of heavy Venezuelan oil, you get nearly 40% diesel. By losing the heavy oil, we are effectively cutting the diesel yield of the U.S. refining system by half. Even if we pump more oil in Texas, we cannot make enough diesel. The chemistry forbids it. This creates a structural shortage. It means that starting in February, the truck stops in the Midwest will start putting up signs. Diesel rationed, 50 gallons max. This is where the diesel death spiral begins. Modern logistics is built on just-in-time delivery. Walmart doesn't keep 3 weeks of food in the back room. They keep 3 days. They rely on a constant stream of trucks arriving every 15 minutes. But what happens when the price of diesel jumps from $4 to $8? Or worse, what happens when the fuel simply isn't there? The independent truckers quit. The owner-operators, the guys who own their own rig, operate on razor-thin margins. If fuel costs double, they are bankrupt instantly. They park the truck. They go home. We saw a preview of this in 2022, but this time it isn't a price spike. It is a supply void. When 20% of the trucking fleet parks, the just-in-time system breaks. The 3-day buffer at the grocery store becomes a 0-day buffer. The shelves go empty. Not because there is no food, but because the food is stuck in a warehouse 500 miles away, and there is no diesel to move it. And for the trucks that do keep running, the cost gets passed to you. This is the inflation multiplier. When the price of gas goes up, your commute gets expensive. When the price of diesel goes up, everything gets expensive. Think about a loaf of bread. The tractor that plowed the wheat field, diesel. The harvester that cut it, diesel. The train that moved the grain, diesel. The truck that delivered the bread to Kroger, diesel. If diesel goes to $8, the price of that bread doesn't go up 10%. It goes up 100%. We are looking at cost-push inflation on a scale we haven't seen since the 1970s, and the Federal Reserve cannot fix it. Jerome Powell can print dollars. He cannot print Miri 16 crude oil. Raising interest rates won't make the Orinoco Belt start pumping again. Now the White House knows this is coming. That is why they are going to lie to you. In the next 2 weeks, you will hear them announce a release from the Strategic Petroleum Reserve, SPR. They will say, "We are releasing 10 million barrels to stabilize the market." Do not believe them. Look at the grade of oil in the SPR. We already sold the heavy oil in 2024. The only thing left in the salt caverns is light sweet crude. Releasing more light oil into a market that is starving for heavy oil is like giving a drowning man a glass of water. It does nothing. It is political theater. The refineries will look at that SPR release and say, "We can't use this. We need the Venezuelan sludge." And the price of diesel will keep climbing. And there is one more victim of the yield collapse: jet fuel. Chemically, jet fuel, kerosene, is almost identical to diesel. They come from the same part of the refining tower. If we are short on diesel, we are short on jet fuel. By March, expect to see the airlines canceling flights. Expect to see fuel surcharges of $200 on a domestic ticket. The travel boom is about to hit a brick wall. The entire transportation sector, from your Amazon package to your Delta flight, is about to be held hostage by the chemistry of the Orinoco Belt. So, the trap is set. The refineries are starving. The trucks are parking. The shelves are emptying. But there is a secondary prize in Venezuela that is even more valuable than the oil. While the U.S. military was securing the oil fields, a separate unit was moving south towards the Amazon jungle. They were looking for the black sands. They were looking for the minerals that China has been smuggling out of the country for 5 years. In the final section of this dossier, I'm going to show you the Orinoco secret. I am going to explain why gold and silver are just the tip of the iceberg, and why the real reason for the invasion wasn't fuel, but missiles. We have covered the refinery heart attack. We have covered the diesel death spiral. By now, you understand why your gas bill is about to double. But if you think the United States deployed a carrier strike group to the Caribbean just to secure some dirty, heavy oil, you are thinking too small. You are thinking like an economist from 1990. The generals in the Pentagon don't care about the price of gas at your local pump. They care about global supremacy. And while the cameras were focused on the oil wells in the north, satellite intelligence confirms that a second, smaller U.S. force was moving south. They weren't heading for the refineries, they were heading for the jungle. They were heading for the Orinoco mining arc. This is a zone the size of Portugal that sits south of the river, and buried under that triple canopy rainforest is something far more valuable than oil. It is the reason China has been keeping the Maduro regime on life support for 10 years. It is the reason this raid happened on January 3rd specifically. They went to seize the black sands. What are black sands? To the naked eye, it looks like dirt, but to a metallurgist, it is coltan, short for columbite tantalite. It is a dull blue-black ore that contains tantalum. You might not know what tantalum is, but your life depends on it. Tantalum is the most heat-resistant, corrosion-resistant metal on the periodic table. It is the only material capable of holding an electrical charge in a capacitor that fits inside a smartphone or a guidance chip for a hypersonic missile. You cannot build an F-35 fighter jet without tantalum. You cannot build a nuclear submarine without tantalum. You cannot build an AI data center without tantalum. For the last 20 years, the US has been terrified of one fact. We don't mine it. China dominates the supply chain. But Venezuela has massive untapped veins of it sitting right on the surface of the Guiana Shield. And for 5 years, Nicolas Maduro has been quietly selling this strategic stockpile to one buyer. This brings us to the China pipeline. This is the secret that triggered the invasion. Intelligence reports have long suggested that Chinese mining firms, state-owned entities disguised as infrastructure contractors, have been operating deep in the mining arc. They weren't just digging for gold, they were extracting tantalum, thorium, and titanium. They were loading it onto unmarked bulk carriers, the Shadow Fleet, and shipping it directly to processing plants in Guangdong. This was a strategic hemorrhage. The raw materials needed to build the US military's next-generation weapons were being siphoned off by its greatest adversary right from its own backyard. On January 1st, a rumor circulated in intelligence circles that Venezuela was about to sign a formal exclusivity pact with the BRICS alliance. This treaty would have legally handed over the mineral rights of the Orinoco Arc to China and Russia for 50 years. That was the red line. The United States could survive high gas prices. It could not survive a tantalum embargo. The raid on January 3rd wasn't just about seizing oil, it was a denial of service attack. The US military went in to physically sever the Chinese supply line. They blew up the airstrips, they seized the ports, they blockaded the river. They didn't invade to take the minerals, they invaded to make sure China couldn't have them. This explains the market anomaly you're seeing right now. Look at the gold chart. Usually when the US dollar gets strong during a war, gold goes down. But today the dollar is up and gold is at an all-time high. Why? Because the market knows that this is no longer a trade war, it is a resource war. By seizing the Orinoco, the US has signaled that the era of free trade is dead. We are entering the era of resource nationalism. Every country with a mine is now a target. Every country with a vault is now a fortress. China will retaliate. They won't send troops to Caracas. They will retaliate by dumping US treasuries. They will retaliate by banning exports of gallium and germanium to the West. They will weaponize their own supply chains. Gold is rising because the global ledger is breaking. Smart money realizes that if the US can seize a country's minerals overnight, then paper contracts for commodities are worthless. The only thing that matters is physical possession. And there is one final secret in the black sands, thorium. Venezuela sits on one of the world's largest reserves of this radioactive metal. Thorium is the fuel for the next generation of nuclear reactors. Safe, clean, and impossible to turn into a bomb, usually. But it is also a critical component in high-end satellite optics and lasers. China is building thorium reactors. The US is not. By locking down the Orinoco, the US has effectively put a chokehold on China's nuclear energy roadmap. This is 4D chess played with live ammunition. The diesel shortage we talked about in Section 1 is just the collateral damage. The food inflation in Section 2 is just the civilian cost. The real objective was to secure the periodic table for the Pentagon. So where does this leave you? You're caught in the crossfire of a resource war. On one side, you have the diesel shock that is about to destroy your purchasing power. On the other side, you have the mineral war that is destroying the safety of the financial system. You cannot stop the aircraft carriers. You cannot fix the refineries. But you can build a bunker for your own wealth. You can position yourself so that when the price of diesel hits $8 and gold hits $4,000, you aren't the victim. You are the beneficiary. In the final section of this dossier, I'm going to give you the archivist's war protocol. I'm going to tell you exactly what to buy, what to sell, and the one specific asset class that thrives when the world runs out of energy and enters a hot war. We have walked through the crime scene. We have analyzed the refinery heart attack, the heavy oil shortage. We have mapped out the diesel death spiral, the supply chain collapse. We have exposed the black sand secret, the war for strategic minerals. The diagnosis is terminal. The world you lived in yesterday, a world of cheap energy, invisible supply chains, and free trade, died at 6 a.m. on January 3rd. The Jan 3rd raid was the firing of the starting gun for a new era of resource nationalism. So what do? Most of you are sitting in a portfolio designed for 2019. You own tech. You own consumer discretionary. You own bonds. You are betting on peace and deflation. You are about to get slaughtered. Here's the archivist war protocol. These are the 3 specific moves you need to make to survive the diesel shock. Protocol Step 1, purge the Amazon risk. I'm not telling you to short Amazon specifically. I'm using them as a proxy. I am telling you to exit any company whose primary business model relies on cheap shipping. Look at your portfolio. Do you own companies that import plastic from China and truck it to Ohio? Do you own companies with thin margins that rely on free 2-day delivery? Sell them. When diesel goes to $8 a gallon, their margins go to zero. When the just-in-time delivery network fractures, their inventory gets stuck in a port. The market hasn't priced this in yet. They are still looking at the consumer demand. They aren't looking at the delivery cost. Rotate that capital into the companies that own the commodities, not the companies that move them. In a resource war, the middleman is the first casualty. Protocol. Step 2, buy the kinetic hedge. We discussed the black sands in Section 3. The U.S. military just expended millions of dollars in munitions to secure the Orinoco. They are going to need more. This is the grim reality of the tantalum war. The defense contractors, Lockheed, Raytheon, General Dynamics, are the new utility stocks. They are the only companies with a guaranteed government customer who must buy their product regardless of the price. But don't just buy them blindly. Look for the ones specializing in missile guidance and drones. Why? Because those are the systems that use the rare earths found in the Orinoco. The raid was a signal that the Pentagon is securing the supply chain for a massive rearmament cycle. You want to be long the swordmakers when the empire goes to war. Protocol Step 3, the inflation arbitrage. This is the most important step, and it doesn't happen in your brokerage account. It happens in your garage. If I told you there was a stock guaranteed to go up 50% in the next 30 days, would you buy it? Of course. Well, that stock is a 50 lb bag of rice. That stock is canned goods. That stock is diesel fuel. Remember the inflation multiplier we discussed in Section 2. When the diesel shortage hits the food distribution network in February, food prices are going vertical. Buying non-perishable food today at current prices is an immediate return on investment. You are locking in today's peace price before the war price hits the shelf. This isn't prepping. It is arbitrage. It is financial common sense. If the cost of transport doubles, the cost of the product doubles. Fill your tank, fill your pantry. Do not wait for the news to tell you there is a shortage. By then, the rationing signs will already be up. Finally, how will you know when the crash is starting? You need to watch one specific indicator. Ignore the Dow Jones. Ignore Bitcoin. Watch the 3-2-1 crack spread. This is the profit margin for refining oil into gasoline and diesel. If you see the crack spread blowout spike higher, it means the refineries are failing. It means the Mary 16 shortage has hit the critical phase. It means the system is screaming for product that doesn't exist. Right now, the spread is stable. But watch it every morning. The day it spikes is the day the diesel death spiral officially begins. So let's summarize the dossier. The January 3rd raid was not a police action. It was a seizure of assets. The United States just nationalized the most strategic energy and mineral reserve in the Western Hemisphere to stop it from falling into the hands of the BRICS alliance. The cost of this victory is the refinery system. We have broken the chemical chain that powers the economy. We have traded cheap gas for strategic control. $200 oil is not a possibility. It is the tuition fee for the New World Order. The map has changed. The Orinoco is no longer Venezuela. It is a U.S. garrison. The supply chain is no longer global. It is militarized. The price of everything you buy is about to reflect the cost of the missile that secured it. Do not be the person waiting for prices to go back to normal. Normal is gone. Scarcity is the new baseline. This is Archivist. The protocol is active.